Good evening. We're picking up the pulse of the markets. It's a Thursday edition of Market Pulse live on News Central in partnership with Nairametrics. You're getting a comprehensive breakdown of market activities today, as well as insights into some of the events that are driving the market. So welcome, settle in. I am your host, Joanna Mustapha. And of course, on the show today, how are banks borrowing, layering pressures on Nigeria's currency market? That's what we hope to get into. We're also turning our attention to the fixed income market, where T-bills are witnessing declining interest despite increased interest rates. What's going on there? All this and much more. But first, let's begin with a quick market recap. The NGX, the market closed at its lowest in 2 weeks. All share index at 100,156.96, down 21%. And of course, inching lower or inching towards the 100,000 marker. Will it dip lower by tomorrow? We will see. So the bearish run in the markets apparently was driven by the whitewashing of banking stocks. These stocks have been taking major hits since the government announced that now 70% windfall tax. We saw FCMB declining by 8.75%. First Bank almost 3%. All the banking stocks today apparently took a hit, aside Jais Bank and Wema Bank. So we're seeing the top gainers today. Custodian Livestock is back on the gainers list, up 3.91%, still a bit marginal there. United Capital, Orlando, some of the usual suspects. And if we come to the top losers list, and for the record, analysts have tried to warn the government about that windfall tax, albeit the warnings apparently are falling on deaf ears. So our hopes for dividend boost for shareholders by banks going to be dashed by this planned tax. Moody's is also giving its perspective on that, and we're going to get into that conversation on Pulse of the Day. Top losers, we're seeing QTIX, of course, investors taking returns, right, on that. Is on the top losers list, losing 9.51%. FCMB, we did talk about that, and banking stocks taking a hit today as well. If we come to the top movers list, we're also seeing quite some activity in that regard. Top gainers, as I said earlier, usual suspect. Top losers, Omatech declined by 10%. Investors are taking, like I said, profits on QTIX with the stock declining 9.51%. Tourist Company of Nigeria, they're the owners of Federal Palace Hotel. They saw about 973 million shares change hands today. We can see that up there, top movers list. Fidelity Bank, Zenith Bank, GTCO and Access as well. Banking stocks up there on the top movers list by trade volume. So we're seeing a lot of activity there. And again, we're going to have to wait and see. Tomorrow is the final trading day of the week. Will the all-share index dip below that 100,000 marks that has been celebrated? Joining us after the break, of course, will be Research and Insights. Research and Insights Associates at Nuremberger Financial Group, Samuel Oyekomi. He'll be joining me after the break to assess the pulse of today's market. So stay with us. All right, you're tuned into Market Pulse. Right now, we're picking up the pulse of the day with Samuel Oyekomi, Research and Insights Associates at Nuremberger Financial Group. Thank you for joining me again, Samuel.
Thanks for having me, Joanna. Good afternoon.
Good afternoon. We begin with the currency market, where we've seen intensified efforts from the CBN, and I wish I could also say other quarters, right, to strengthen or at least stabilize the Naira. Pressure points are being identified, demand being tightened. But now there are reports on the Naira's pressure being traced to banks borrowing from the CBN. Let us a bit into the role the banks are playing in currency markets and its effects on inflation.
Okay, thank you very much, Joanna. So before now, let's say about some couple of months ago, if you remember, the CBN came up with a policy around net open positions for banks, and that's pretty much seeing a lot of FX balances on some of the balance sheet items for the banks. And as of then, it was traced around the fact that banks are converting or pretty much converting Naira to dollar as a means to hedge or speculating against the exchange or against the Naira. Of course, one of those factors that are there, one of the suspects was that banks are holding this FX, they're buying, converting to dollars, but they're not selling out to consumers who want them. And of course, anyone could also say that, which makes sense anyways, when you have Nairas in your balance and then you convert them to dollars in order to sell them in the future. And of course, we saw the huge amount of gains that the banks have made. But I think right now that suspicion will not be working anymore, because as a result of the CBN policy a couple of months ago, banks are not expected to have long positions anymore in their balance sheet. So I don't think right now we have those kind of problems. I think the CBN might or most likely have caught some of those excesses in such that the banks are speculating against the exchange. But right now, I think the market is really just moving around a bit as a result of high demand. There are a lot of things happening. A lot of people want to travel out of the country. A lot of people have FX obligations in terms of payment, BTA or PTA, as the case may be. And all these things are also putting a lot of pressure on the exchange rate. And then again, you look at it from other quarters, the fact that we are having huge inflows into the economy, we are also having equal outflows also. So you're having a lot of movement around. So the hot dollars, hot exchange and FX that's coming to the economy is not necessarily staying. And that's why we see those level of volatilities in the FX market.
All right, fair enough. And of course, it's holiday season, so a lot of people may be traveling out. That would definitely put some pressure on the dollar. Thank you for that. Let's come to the conversation around the windfall tax, right? And we have a global credit rating agency now weighing in. Moody, they have said that the windfall tax on FX gain is credit negative for banks and will significantly reduce the profits available to banks. They're essentially saying that the windfall tax will have a particularly negative effect on banks whose capital adequacy is close to the regulatory threshold. Do you align with their viewpoints?
Yeah, I think that's a no-brainer. But again, everyone expected that, because if you remember, immediately earlier in the year, the CBN had announced that banks are not allowed to spend part of their FX gains on either payments of dividend or operational expenses. So it appears that money is just kept idle, hoping and waiting for what the government is going to do next, and then the windfall and tax issue comes up. So of course, I totally align at the fact that profits will decline, but the profits based on the policy by the CBN initially is not theirs for the taking. And again, if you remember during the time of the capitalization by the CBN, they also noted that the should not be added. In fact, the retained earnings as a whole should not be added to their capital adequacy or their minimum capital shares. So looking at all these factors, it's really a no-brainer to even start coming up with that right now, because of course the profit based on some of those policies is not theirs for the taking in the first place. So yeah, profits will decline. They would have to raise their capital the normal traditional way that the CBN has noted earlier on rights issues. We're seeing a lot of that happening already on the NGX. So
I mean, that's a lot.
It affects profit, but not more.
That's a lot more pressure on the banks, of course. And let's come now to the NSE, Nairobi Securities Exchange. The share of investor wealth concentrated on the 5 largest companies at the Nairobi Securities Exchange. We know that has fallen by 66% from highs of 81% 3 years ago. As of yesterday, closing share price, the combined market valuation of Safaricom, these are the top players, right? Equity Group, ABL, KCB Group, and Absa Bank, Kenya, they stood at 1.09 trillion Kenyan shillings against, what the total market cap is. What is this telling us about, NSE and its listed companies, especially the top 5?
Yeah, I think interestingly, it gives different dynamics, but it also gives like an interplay with macros and then the equities market. So if you remember, earlier in the year, there was FX scarcity in Kenya. And as a result of that, many of the foreign portfolio investors in the equities market could not repatriate. So many of them were they want to take profit, but they could not because there was no dollars in the system. And then the government raised some funding in order to pay some of their maturities. One of them matured in June, and then there was FX liquidity. So we saw a lot of outflows from foreign portfolio investors within the first 3 months of the year, and that had some significant impact on the stock market. And of course, the most liquid set of shares. The big guys, the Hafsas and Co's, and that on one side. The other part again is also gives you dynamics of how the market is really being concentrated. It's also similar like to what you see in NGX, for example. That's the Nigerian stock market,
right,
where you see the top 10 most capitalized stocks in the market, or controlling almost 70% of the entire market. So it gives you the amount of concentration that you have on particular stocks. And then from a Nigerian point of view, you have about 150 stocks listed, but just 10 of them control almost about 70%. So it gives you really an interplay of how the market is. So it's pretty dynamic. Foreign portfolio investments, they pulled out, although some came in, but a lot more went out, and that had some impact on the stocks of the big ticket stocks in the equities.
Mm-hmm. Let's stay in Kenya now, but the fixed or the bond market, right? This time, the bond market, they're also missing the mark. Central Bank of Kenya has missed its target for a second time by 51% in the July bond auction, with investors seeking higher rates to maximize their real yields. Weekly Treasury bills were undersubscribed for the first time in 3 weeks. Demand also remained pegged on the short-term 91-day paper. What does this reflect about investors' inclination and their expectations on Kenyan bond markets?
Just like it is in pretty much every other economy, everyone is looking to chase high-yielding instruments, right? Of the country, especially if the exchange rate is floated enough for you to go in and go out, and that's also playing in for other economies. Everyone is chasing high-yielding instrument, but then again, Kenya has had some very rough times in recent times. They had a downgrade on some of their government instruments. And when you have some of this issues and bottlenecks around the credit worthiness of your country, the chances that people won't want to go to the primary market to obtain some more, to buy some more, those your papers, and that's what we're seeing right now. And then the question is that do the government really do have the width anymore to be able to some of these borrowings? So those are some of the readings that local investors or foreign investors will look at for them to decide if they want to buy in or not. And I think that's what's playing out right now in Kenya.
Right, yeah, and I mean, NGX seems to be mirroring that. We'll have that conversation later on Spotlight. But thank you so much for joining me, Samuel Oyekomi, Research and Insights Associate at Norimberger Financial Group. Up next, we'll be talking about, in spite of the increased interest rates, right, there's declining interest in T-bills. This conversation is going to take the spotlight next on Market Pulse. You're watching Market Pulse, and in the spotlight today, National Treasury Bill Auction. Yesterday, driving conversation on the fixed income side of things. The CBN has been quite aggressive in its efforts to attract FX portfolio investors through the use of Nigerian Treasury Bills. And this was done through jacked up interest rates, which has caused the banks to, rack up Nigerian Treasury Bills debt of up to 10.4 trillion naira in just 3 months. However, in recent times, the banks have become more cautious in its approach with interest rates on the first year, Nigerian Treasury bills coming down from the previous record high of 21.5% to settle around 20.5% in May 2024. Joining me to discuss the results from yesterday's TBills auction is David Olujimi, financial markets analyst with Nairametrics. Good evening, David.
Hi, good evening, Joanna.
Right, great to have you in. Results from the T-bills auction of yesterday showing that CBN has hit a new record high yield. What are your thoughts? What was their yield, and how do you think this affects the equities markets?
So yesterday, the CBN issued its one-year bills, its 364-day bill at 22.1%, record high. Then it also issued the 182-day bill at 18.5%. It issued it at 19% rather. Then it issued the 91-day bill at 18.5%. Record high. In a way that this is a reflection of where our interest rate is now in the country. So we have interest rate at 26.75%. We cannot have yields at 20% anymore. That's like too much negative returns.
We're also seeing that, trend of declining investor interest in these securities. Yesterday, we witnessed a 52% decline in subscription from last month, despite the rising yield. What could have warranted this, and what does this signify?
So basically, what would have warranted it is the level of what I would describe as a reduction in system liquidity. A lot is going on right now in the country when it comes to the monetary space. There's equity raises, there's capital raises by banks, there is the equities market is still playing. Then we have the government, then we have commercial papers. Right now, the T-bills are at a lower interest rate than even some commercial papers that have been issued recently. Like, for example, we saw Dangote Sugar issue commercial paper at 25%. So a lot is going on in the market. There's a lot of need for financing. And where do we get this? And coupled with the fact that there's a lot of inflationary pressure in the society. So we see the big corporate needing much more funds than they would need in the past. So that's one of the things I would say, that there's a lot of things dragging the attention of people who play in the space of money markets and equities markets. We see different things drawing and dragging people's attention here and there right now.
Right, and can the liquidity spread across all these demands? But based on these happenings with rising benchmark rates, right, rising yield rates in the fixed income market, what are your projections for the equities market? How does this affect the equities market?
So basically, rising interest rates normally would have had significant interest, would have had significant impact on the equities market. That is what is expected to happen. We are expected to see a lot of interest shifting to fixed income space. For example, at the start of the year, when we saw the federal government issuing bills at 21%, we should have seen the equities market also receiving a decline. But the reality is quite different for the equities market. As we saw from the start of the year, Q1 2024, our market is quite resilient. So I don't think it's going to have much impact, because I think right now the market is developing, the market is resilient, and the market just keep going. It may not record the same, it may not have the same level of growth it had last year, but we are going to see. I'm projecting that we're going to see a positive run in the market this year, irrespective of what benchmark rate is seeing.
Interesting. It will be interesting to see how things pan out this year for the markets, especially H2, right? We've seen that great performance for H1. We'll wait and see. It's still early on to see what H2 has in store. It's always a pleasure having you in. David Olujimi, financial markets analyst with Nairametrics. All right, over to you. Where is your appetite when it comes to Nigerian Treasury bills? Share with us on X at Nairametrics. There's a poll up right about now. Up next, we're heading to the African market, so stay with us. All right, it's still Market Pulse right here on News Central in partnership with Nairametrics. And of course, African markets, we're seeing a mixed performance. That's where we're at right now. We're seeing a blend of, everything. And of course, with all the data coming out, markets are bound to react. The GSE is down 0.57%. We're also seeing the Casablanca index down 0.22%. Egypt up, I beg your pardon, 0.22%. Egypt as well, still down from yesterday as well, continuing its bearish run. Nairobi Stock Exchange, any surprises there? I doubt it. It's still heading, tilting downward 0.77%. Ghana Stock Exchange is up 1.38%. So a lot of activity there. Of course, we'll continue to track activities in that market. That's the African markets for you. And of course, there's so much more that we'll be tracking here on Market Pulse, right? There's a lot of activity, a lot of news from the government, and of course, the markets will continue to react, whether it's the currency markets, whether it's the equities or fixed income. We'll be here to track it, for you. We'll be monitoring that. We do this every weekday from 4 p.m. So make sure you tune in again tomorrow for the final market day of the week. We'll be providing you insights and drivers of the markets. I'll be leaving you with what's happening on the international markets.